Well, today marks the fifth session of the Learnovation Lounge series. Through these sessions, we definitely aim to strengthen members' capacity, especially in terms of knowledge and also awareness across cross-cutting thematic areas that provides support on financial inclusion. Today we will focus on Sri Lanka's journey in strengthening consumer protection, particularly through preventive and mitigating approaches to protecting our consumers. The key question is not only whether a central bank has a consumer protection framework or guideline, but also how consumer protection policies adapt to evolving market conditions and changing patterns of consumer complaints. Well, from my perspective, while it is important to clarify the roles and responsibilities of financial service providers, it is also equally important to promote responsible consumers. I'm sure you will agree with me. Well, every country may take a very different approach, yet many elements, as far as I know, such as consumer protection principles, rules and responsibilities, complaints handling mechanisms, and supervisory approaches, they are all very familiar to us. So today's session will therefore, I think, be a very informative opportunity for regulators to learn practical lessons and initiatives from one of our SARFI member country. We look forward to hearing from our speakers from the Central Bank of Sri Lanka. It is now my pleasure to welcome our moderator and facilitator, Mr. Yanaka Yamitra Ranavira, who is the Deputy Director of the Financial Consumer Relation Department at the Central Bank of Sri Lanka. And Mr. Yanaka comes with a strong academic background in both economics and law, along with his 16 years of experience in the central bank. His work has covered the supervision of non-bank financial institutions, financial consumer protection, financial inclusion, and very interestingly, on investigations into prohibited schemes. So welcome, Mr. Yanaka. Let me begin with a question myself that I'm sure many of us will find it relevant and very interesting as well. What would prohibited schemes in Sri Lanka's context? Are they similar to the Ponzi scheme that we see around? Well, we would appreciate it if you could shed some light on this before you introduce the speakers. So, Mr. Yanaka, the platform is now yours for the next 30-40 minutes. Over to you. Welcome.
Okay, thank you very much, Nancy. Good afternoon, distinguished guests, ladies and gentlemen. To answer Nancy's questions, as per the 83C section of the Banking Act of number 30 of 1988, Sri Lankan Banking Act, the Central Bank of Sri Lanka has been empowered to conduct investigations into prohibited pyramid types, prohibited schemes. So currently, Financial Consumer Relations Department of the Central Bank of Sri Lanka is conducting such investigations into suspicious prohibited type pyramid schemes. So as a deputy director attached to the Financial Consumer Relations Department, under my direct supervision, such investigations are going on. So currently, we have determined 25 suspicious schemes as a prohibited schemes in terms of the said section 83 of the Banking Act. That's the background, Nancy, meaning of the prohibited schemes. So with that, on behalf of the Central Bank of Sri Lanka, it's my pleasure to welcome you all to this important international seminar on, as Nancy said, from financial consumer complaints to consumer confidence, Sri Lanka's journey towards market conduct supervisions. So following the welcome remarks, we now moving on to the today's keynote presentation that will explore Sri Lanka's experience in transforming financial consumer complaints handling into a broad market conduct supervisory framework with the ultimate objective of enhancing consumer confidence, promoting a fair, transparent, and resilient financial sector in Sri Lanka. So it is now my privilege to introduce our two distinguished resource persons who have played a significant role in the development and the implementation of the financial consumer protection framework in Sri Lanka. So our first speaker is Mr. Varuna Vikumsiri, Senior Assistant Director of attached to the Financial Consumer Relations Department of the Central Bank of Sri Lanka. So Varuna currently heads the policy division of the Financial Consumer Relations Department, and he has 19 years of experience at the Central Bank of Sri Lanka. So our second speaker is Mr. Kamal Disanayake, Senior Assistant Director attached to the Financial Consumer Relations Department of the Central Bank of Sri Lanka. So Kamal currently serves as the head of the Public Relations and Complaint Handling Division of Financial Consumer Relations Department. So Kamal also has experience for 19 years in Central Bank of Sri Lanka. So, dear distinguished participants, please join me in warmly welcoming our resource persons. Without further ado, I invite Mr. Varuna Vikumsiri to commence today's presentation. Mr. Varuna, the floor is now yours.
Thank you, Mr. Anaka, for your kind introductions. I hope it's good afternoon for everyone. Today's presentation is titled From Consumer Complaints to Consumer Confidence, Sri Lanka's Journey Towards Market Conduct Supervision. So over the next 30 minutes, Mr. Kamal and I will briefly share Sri Lanka's journey in strengthening financial consumer protection, how we transform complaint handling into a proactive market conduct supervision function, and some key achievements, the challenges we continue to face, and our future direction. As Nancy mentions, although every country has its own regulatory and institutional context, many of the challenges we encountered are common across all the jurisdictions. I therefore hope that some of our experiences and lessons learned will be useful to other member institutions also. Okay, next slide, please. So before explaining our supervisory approach, let me briefly describe the Sri Lankan financial sector landscape. This table presents the composition of Sri Lanka's financial system in 2025. The total assets of the financial system amounted to rupees 40.9 trillion. The financial system of several types of insurance regulated by different authorities are there, but mainly dominated by banks. The Central Bank of Sri Lanka regulates licensed commercial banks, licensed specialized banks, finance companies, and some licensed microfinance companies and primary dealers. There's another regulator called Insurance Regulatory Commission of Sri Lanka, which regulates insurance companies, while our Securities Exchange and Commission of Sri Lanka regulates Colombo Stock Exchange. And there are another type of banks called cooperative rural banks, which are regulated by Department of Cooperative Development. The Employee Provident Fund, is a pension fund, is managed by the Central Bank, and the Employee Trust Fund, another pension fund, administered by the Department of Labor. And I also need to mention that there's a new act came to effect this year, Microfinance and Credit Authority Act number 9 of 2026 has officially come into force in Sri Lanka. Under this act, the new Microfinance and Credit Authority Regulatory Authority will license and regulate all money lenders and microfinance institutions, strengthening the country's regulatory framework for the microfinance sector. Next slide, please. Okay, now under central bank, now let me briefly describe this institutions under central bank. As of May 2026, we are supervising 24 licensed banks, 6 licensed specialized banks, 32 finance companies, and 4 licensed microfinance companies. Together, these institutions serve millions of consumers across the country. Although all these institutions provide financial services, they differ considerably in their size, business models, customer segments, and products. Commercial banks typically offer a comprehensive range of retail and corporate banking services. What this licensed finance company often focus on like leasing, vehicle finance, consumer lending, and fixed deposits. Microfinance companies primarily serve these lower income households and underserved communities. And this diversity means that consumer protection cannot adapt a one size fits all approach. Instead, regulations must establish common principles while allowing institutions to implement them according to their respective business models and risk profiles. Next slide, please. So the question often arises is, why did Sri Lanka decided to strengthen financial uh, consumer protection? The answer lies in several significant developments that occurred over the past 2 decades. Several developments prompted Sri Lanka to strengthen financial consumer protection. Globally, the global financial crisis demonstrated that the poor market conduct could undermine confidence in the financial system. More recently, Sri Lanka's economic crisis created a significant financial stress for households and businesses. And during this period, central bank received increasing number of complaints relating to loan moratoriums, high interest rates, fees and charges, and communication with financial institutions. These complaints highlighted the many consumer issues were not necessarily caused by weak prudential regulations. Instead, they often resulted from poor disclosure, inadequate communication, or weakness in complaint handling. At the same time, international organizations increasingly recognized financial consumer protection as a key element of finance stability and inclusion. And these developments reinforce the need for Sri Lanka to establish a stronger and more comprehensive consumer protection framework. Next slide, please. Okay, now Sri Lanka's consumer protection framework did not emerge overnight. Instead, Sri Lanka approach has evolved gradually over the past maybe 15 years. Our first milestone was introduction of the customer charter for banks in 2011, and followed by the consumer protection framework for these non-bank financial institutions in 2008. And recognizing the growing importance of this consumer protection, the central bank established the Financial Consumer Relations Department in 20, that is our department, in 2020, August 2020. This represented the major institutional change. Instead of this treating consumer complaints as an administrative function, the central bank created a specialized department responsible for consumer protection and complaint handling. Perhaps the most transformative milestone came in 2023 with the issuance of Financial Consumer Protection Regulations number 1 of 23. And these regulations transform the financial consumer protection from a set of guiding principles into an enforceable regulatory framework, applicable across all regulated financial services provided by Central Bank of Sri Lanka. This marked the beginning of our transition from simply responding to consumer complaints towards proactive supervising market conduct. In the next section, I will briefly explain the key features of these regulations. Next slide, please. Now, let me turn to what I consider the cornerstone of Sri Lanka's financial consumer protection framework, the Financial Consumer Protection Regulations number 1 of 2023. These regulations establish a comprehensive and enforceable framework applicable to all regulated financial services provided under the Central Bank of Sri Lanka. More importantly, they shifted the focus of consumer protection from simply resolving complaints to ensuring that consumers are treated fairly throughout their entire relationship with the financial institution. The regulations are built around 5 key regulatory pillars. First one is the governance. Consumer protection should not be viewed solely as the responsibility of customer service department or compliance department. It should be embedded within the institution's governance framework, with the board of directors and senior management responsible for promoting a customer-centric culture and ensuring compliance. And the second pillar is fair treatment and responsible business conduct. Sorry. Financial institutions are expected to act honestly, fairly, and professionally at every stage of the contract. That means pre-contract or post or at the contract stage. Products should be appropriate for target market, and insurance should avoid misleading sales practices or maybe unfair treatment. The third pillar is transparency and disclosure. Consumers should receive clear, accurate, and timely information about financial products, including interest rate, fees, charges, risks, and key terms and conditions. Good disclosure enables consumer to make informed financial decision and help to reduce disputes. The fourth pillar focuses on complaint handling and redress. Every financial institution is required to maintain an effective complaint management process that allows complaints to be resolved fairly, consistently, and within reasonable time frame. Fifth and the last pillar is protection of consumer assets and information. There's a separate act for data protection in Sri Lanka. Additionally, now under this, as financial services become increasingly digital institutions must ensure that customer funds, personal information, and financial data are adequately protected through appropriate internal controls and maybe cybersecurity measures. Together, these five pillars provide the foundation for fair treatment, responsible business conduct, and a greater confidence in the financial system. Now I will pass the mic to Mr. Kamal to explain this the evolution of our complaint handling mechanism, and he will explain more on complaint handling mechanism. Thank you.
Right. Thank you, Varna. So, good afternoon. So, the Financial Consumer Relations Department of the Central Bank is one of the youngest department in the bank. So before establishment of this particular department, the complaints of banks were handled by Bank Supervision Department.
Mr. Kamal, may I intervene? I think there's an echo from your voice. Do you have two devices on? Otherwise, you would want to keep one off.
So
yes, this is good.
Thereafter, and also the finance companies also can accept deposits. The relevant to these complaints of the finance companies are handled by Department of Supervision of Non-Bank Financial Institutions. But with the increase of the public complaints and also with the intention of, next slide please. Right. With the intention of handling the public complaints in more efficient manner, and also in order to be in line with the international best practices, Central Bank of Sri Lanka decided to establish a new department called Financial Consumer Relations Department in August 2022. Sorry, August in 2020. So with at the initial stage, the department had two divisions, two parts. One is that there is a division, so there's a contact center which respond to the verbal inquiries or complaints made by general public. And also there was another division which looked after the complaints were received through letters or emails. So at the initial stage, with a very limited number of staff, the department was established and department worked. So the initial stage, what happened was, so the department maintained a workflow. Under that workflow, when we received a complaint, initially the handling team was there. The handling team got the complaint, and they evaluate or they analyze the complaint. After analyzing or evaluating the complaints, they forward it to the reviewing division. The reviewing division is further analyze the customer complaint and submit their recommendation or course of actions to the final approval authority. So final approval of authority take the decision on the public complaint, how to do and what to do. That was the manual process maintained by the department. At that stage, in this process, so when we received a complaint, we assigned a unique identification number for each and every complaint. So that was maintained in that workflow is maintained in the Excel sheet. So each and every complaint had a unique identification number, and review handling team, review team, and approval team use this workflow to process the customer complaint or handle the customer complaints. So in 2022, the department established in 2020. In 2022, the particular regulation called Financial Consumer Protection Regulation number 1 of 2022 was introduced, which was a landmark of the department evaluation. So with the introduction of this new regulation, it gives some kind of exact scope for the department, and also empower department to handle complaint with some kind of space, and also it gives some kind of time frame to attend the complaints. Then thereafter, we will discuss it later, there was a new development. The latest development is that introduction of new online complaint management system, so management system, that will be discussed later. So we will go for the next slide. So this is the performance of the department. So this is the work what we done by the Financial Consumer Relations Department. If you saw the number of calls received for this department, you can see that the department was established in August 2020. So within that 5 months, it had received 30,000 calls. So at that time, the country was, so the last part of the initial part from the March of 2020, the country was locked down, and so we are getting some complaints from a lot of complaints from the general public. So in 2021, also the complaint had received the call had the complaint has recorded the highest ever, because of at that time the pandemic was at the highest level, and also so there was some kind of economic issues were also started at that time. And also in 2022, also you can see that the verbal complaint was more than 60,000, because now at that time the monetary policy was some tight monetary policy was there, and also the COVID impact was also there. In 2023, you can see that there is some slight decrease, because that time the monetary policy has relaxed to a certain extent, and also interest rate also started to drop or reduce. So in again the 2024, you can see the results. The complaint had significantly dropped. But again, if you get the 2025, you can see some increase in the public complaints, because due to this Ditwa impact, that natural disaster, as well as we have received several complaints about some scams. Due to that, the complaint had increased. And if you look at the 2026 position, so for the first 5 months, we have received more than 17,000 calls. So with the global uncertainty and all those things, so we expect that this may increase in future as well. So this is the telephone call received to the department, and also the left side graph, you can see the number of complaints received in writing. So you can see that it was around the last 5 months of the 2020, it was more about 2,500, and generally department is getting 5,000 to 6,000 complaints per year, except 2024, because of that changes in the monetary policy and changes of the interest rate. And also the pattern is there. So you can see that the 2025, that's some increase of the verbal that writing in the complaints, and also 2025 also we have received significant number of complaints. If you go to the composition of this complaint, in generally Sri Lankan context, in Sri Lanka, deposit can be accepted. The banks can accept public deposit, and finance company, that's a financial institution called finance companies, also can accept public deposits. But these finance companies cannot maintain this current account and those things. Generally, they accept deposit for fixed deposits and savings deposits only. So you can see that the trend in these last 3 years. So you can see that the contributor, if you look at the composition, you can see that the number of complaints received from the banking sector is gradually increased. In 2023, it was around 75%. Now 2025, it has increased to 85%. That is a trend of in terms of the sectoral contribution. So next slide, please. So this is about the root cause of the if you see the left side graph, it's the real root cause of the complaint. So we did some kind of root cause analysis of this customer complaints. So you can see the results in 2022, 24, 25 is, even though there is some decrease in trend, the majority of the complaints were relevant to the high interest rate. And also the financial fraud, the complaint relevant to the financial frauds are also gradually increasing. So that when we analyzing the real reasons for this high interest rate issues, were really one of the reason was that there was no benchmark for this interest rate determinations. That is one of the key reason for this increasing trend. So increase the reason. And also we have seen that there is lack of disclosure between the customer and financial institutions about this interest rate. That was also lead to some large number of complaints. And also unfair treatment. Even though there are some terms and conditions in the agreements, the financial institution had charged higher or different interest rate what specified in the agreement. So that was also a reason for this, for the increasing number of, so the high number of public complaints. So, and also if you go for the, if you see the right side of the graph, you can see that the product, the product wise distribution of the complaint. If you see, you can see that the lending related complaints are represent the highest percentage, the highest number in the complaints. If you see, the major contributors for this lending related issues, the loan for personal loans, and also SME loans, lease and credit card relevant issues were the highest the main contributors for the lending portfolio, lending related complaints. So we will go to the next slide, please. Now, if we talk about the latest development of this particular department, our department, Financial Consumer Relations Department, the latest development is introduction of online complaint management system. So from 2020 to 2026 May, so we use manual process to handle customer complaints. But considering the market development and international best practices, and also with the intention of handling the customer complaint in very accountable, efficient, and transparency way, the online complaint management system has been introduced. So with the introduction of this new complaint management system, we expect that gradually convert this the handling of manual complaint system into handled into a digital way, because it will save our time, and also that will enable us to handle these customer complaints in structured and standard formats, and also that will support the effective regulatory oversight and also timely resolution as well. And also this online platform will streamline the complaint management process and reducing the reliance on the printed documents. So we want to reduce the usage of these printed documents. So we are in the process of asking customer to submit all these their complaints through online system. And also with the introduction of this new system, the most important thing is that customers can track their the stage in which the customer complaint is in process, whether the progress of this customer complaint handling. So that is also enhance the transparency of complaint handling. And also, so the introduction of this new online complaint management system will enable us to do more analysis by using dashboards. So that will help to enhance strength and our to intervene the markets through our market that will put input to our market conduct supervision. Now the department is in the process of enhancing the market conduct supervision. This new CMS will enable us to provide more and detailed analysis or input for this market conduct supervision. So Mr. Varuna will explain next. Mr. Varuna will explain you about this market conduct supervision. Over to you, Varuna.
Thank you, Mr. Kamal. Next slide, please. Okay, now Mr. Kamal now mentioned about the importance of the complaint data. However, now this complaint analysis provided us with valuable insights, but identifying risks alone is not enough. The next step was to develop a formal market conduct supervision framework. The objective of market conduct is to identify and address conduct risks before they result in widespread consumer harm. To build this capability, the central bank invested significantly in staff training and capacity building. We also benefited from technical assistance and knowledge sharing with international organizations, including the RFI. At the same time, we developed a dedicated market conduct supervision manual that introduced risk assessment methodologies and adapted a risk-based approach to planning supervisory examinations. Instead of examining every institution in the same way, supervisory priorities are determined using several sources of information, including, like Mr. Kamal mentioned, this root cause analysis on complaint trends, product risks, maybe previous examination findings, and emerging issues within the financial sector. This allows us to focus our supervisory resources where consumer risk is greatest. Our supervisory program has expanded progressively over the past few years. Next slide, please. Okay, now this slide illustrates how our market conduct supervision program has evolved over recent years. In 2023, this is before our regulation came to effect, we conducted our first industry-wide thematic review on the internal complaint handling procedures of financial service providers, FSPs. This also input to our risk matrices as well. In 2024, we carried out our first full scope market conduct examination together with thematic review on high interest rates, which comes from that root cause analysis of complaints, which that root cause analysis highlighted. Then in 2025, we expanded our program by conducting 4 full scope examinations and 3 thematic reviews covering 9 financial institutions. These reviews focused on areas such as digital financial products, products for minors, and credit cards. This also comes, you may be observed during Mr. Kamal's slide. These are highlighted during his slides also. In 2026, we continue this risk-based approach by conducting industry-wide thematic reviews on early settlement practices and Parate execution process. Parate is a repossession process used by banks empowered from law, while another review on now ongoing on responsible lending. These examinations have enabled us to move beyond simply identifying compliance issues. They have helped us to understand the industry practices, identify emerging risks, and introduce improvements that strengthen consumer protection across the financial sector. In the final part of the presentation, I will briefly explain the key outcomes of these supervisory activities, the challenges we continue to face, and our future roadmap for financial consumer protection in Sri Lanka. Next slide, please. Now, having discussed how we conduct market conduct supervision, I would now like to highlight some of the key outcomes of these supervisory activities. One of our key objectives is that supervision should lead to meaningful improvements rather than simply identify regulatory deficiencies. The findings from our thematic reviews and on-site examinations have directly influenced several important regulatory initiatives. For example, we introduced instructions on this annual effective rate of interest to improve transparency and help consumers to compare interest rates within different industries, different products, and better understand the actual cost of borrowing. And also through our offsite supervision, we now see improvements in the disclosure of these annual effective rates. Now they are we delighted to say that now they are disclosing these annual effective rates during their pre-contract stage and also the contract stage. And we also issued guidelines, not only issued, now already drafted guidelines on credit cards together with the frequently asked questions document to address common issues this identified through complaints and supervisory examination. That's mainly based on the last year thematic review on credit cards. In addition, we are planning to issue a circular on fees and charges, providing a greater transparency and consistency in how financial institutions disclose charges to customers. We observed that more than 400 fees types during our analysis, and we were able to bring that about to maybe around 70 charges, and we are planning to standardize this and publish, and public can easily compare these charges and improve the transparency. In addition, other important outcomes include the guidelines on early settlement. This will come after the early settlement thematic review, which promote the fair treatment of borrowers who wish to repay loans before maturity, and the guidelines on microcredit. So also outcome of our thematic review on minor accounts, which support appropriate financial product for children and young people. Next slide, please. Now, earlier example demonstrate how complaint analysis and supervisory findings are translated into practical regulatory improvements that benefit both consumers and financial institutions. But we have made significant progress, but financial consumer continues to evolve, and several important challenges still remain. One challenge is improving this financial literacy and inclusion, their behavior and the attitude. Consumers need not only to assess access to financial services, but also the knowledge to understand financial products and make informed decision, right behavior and the attitude. Another emerging challenging maybe is this rapid growth of the digital financial services. While digitalization has improved convenience and expanded access, it has also increased risks such as cyber fraud, phishing attacks, identity thefts, and more recently AI-enabled financial scams. These developments require regulators to continuously update supervisory approaches and work closely with financial institutions to strengthen consumer awareness and risk management. Like many supervisory authorities, we also face challenges in building specialized expertise and adapting new technologies to support effective supervision. Next slide, please. Okay, now looking ahead, the Central Bank of Sri Lanka has identified several strategic priorities that will guide the next phase of financial consumer protection in Sri Lanka. The first priority is the development of a national-wide comprehensive financial consumer protection law. While the current regulation will provide a strong foundation, dedicated legislation will further strengthen the legal framework and provide greater clarity regarding the consumer rights, institutional responsibilities, supervisory powers, and enforcement mechanisms. Our second priority is the development of additional subsidiary legislations under the law. As financial markets continue to evolve, regulation must evolve. New financial products, digital platforms, innovative payment methods, and emerging technologies will require updated regulatory guidance. Third, we intend to establish a formal alternative dispute resolution mechanism. Although financial institutions are expected to resolve complaints internally, some disputes inevitably remain unresolved. An independent, transparent, and accessible dispute resolution mechanism would provide consumers with an efficient alternative to lengthy legal proceedings while also strengthening confidence in the financial system. Finally, we are working towards greater adoption of supervisory technology or SupTech, maybe within our market conduct supervision framework. The future of supervision will increasingly rely on data. Rather than depending solely on periodic on-site examinations, supervisors will increasingly use real-time information, advanced analytics, maybe AI, artificial intelligence, and digital monitoring tools to identify emerging risks. These technologies will enable regulators to become more proactive, more efficient, and more responsive to rapid challenging market conditions. Ultimately, our vision is straightforward. We aim to build a financial sector where innovation and consumer protection progress together rather than competing with one another. Innovation should improve consumer outcomes, not increase consumer risks. Thank you.
Thank you very much, Mr. Kamal Disanayak and Mr. Varun Vikumsiri, for your insightful and informative presentations. So
Yeah.
we have... Sorry? So, dear participants, as we have limited time, I am directly moving on to the question and answer session. So this is an opportunity for you to seek any clarifications, to share your observations, or raise your questions on the topics discussed today. So if you wish to ask questions, you can send your question via the chat box. So we have already got a few questions. So first questions came from Sana Ahmad. The question is, what is the difference between finance companies and microfinance companies? So I would like to invite Mr. Kamal to answer this question.
Mr. I will answer that question.
Okay, Mr.
Now, finance companies can accept public deposits. Microfinance companies can also access deposit, but those are limited. Those are limited deposits. Only that is only from the lending customers. The customers which they lend, they can accept deposit from them. Those are limited as a collateral, only as a collateral.
Okay. Thank you, Mr. Varna. And we have few questions. Second question
If I
is,
confuse you, can I repeat again? Now, so finance companies can accept public deposits. Microfinance companies can accept deposits from their lender, the customers who company that the company which they lend as a
yes,
collateral.
adding something to the Varuna's clarification. So we have 33 finance companies and 4 microfinance companies. So our finance companies can mobilize, can accept public deposits. Like they are functioning as a shadow banking. Like microfinance companies only can accept deposit as a collateral. Of the loans obtained by the customers. That's the main difference between the finance companies and microfinance companies, right? Now we are moving on the second question. So, second question asked by the Seta Hang. The question is, what are the differences between manual and platform for complaint handling? I think Mr. Kamal will take the question.
Yeah, so initially, so from start from 2020, the Financial Consumer Relations Department use this manual process to handle the customer complaints. That means when we get public complaints through a post or email, we get the complaint and we handle all things are manually. That means we have to prepare, so to analyze the complaints, and also we actually we use the Excel workflow there. So this handling team, reviewing team, approving team, all based on this all these team use this particular complaint. So based on a particular, so we create a file for each and every customer. We have a database, and that database, so we create a particular file for under this unique identification number, and this reviewing and approval teams use this particular file to handle the customer complaint. But in this with this introduction, with this online system, so customers can use the Central Bank of Sri Lanka website and lodge their complaint through this online platform. When we get the complaint, so it will, so there's a particular selection team which has authority to assign that particular complaint to a particular officer who is a part of the handling team. The handling team review it, and automatically it goes to the reviewing team. Then assigned reviewing team officer will review it, and he will through the system he can submit it to the approval officer. So approval officer also can take a decision, and it can send directly to the the general public, the particular general public who created the account. So we can directly send that our responses to the system. If you take the banks and finance companies, so earlier, so we have to send a manual system, we have to send an email asking their observation clarification about the public complaints. In the new system, when we get a complaint through online system, just we can directly send it to the relevant financial institutions without sending through email. So the system allow us to send it directly to the particular financial institution. That will save the time and also has improved the transparency as well as efficiency.
Okay, thank you, Mr. Kamal. So we have received a number of complaints. Nangzi, we have enough time to discuss all questions?
Yes, Ms. Ayanaka, perhaps maybe you can select 2 or 3,
Sure.
and
Sure.
then I would request Kamal sir and Varuna to respond on the chat itself.
Okay, okay. Thank you, Nancy. Yes, next question from Sham Sham. The question is, does the FCRD determine the nature of a complaint and assign it to the department in charge? Also, how many departments are responsible for handling complaints based on their nature? I think, again, Kamal may address the question.
Yeah. So initially when we get the under this new complaint, if we take this under this new complaint management system, online system, so when complaint is received, there is a higher officer who has assigned the duty of selection. That means he will look at the complaint and he will do some primary analysis on the complaint. Sometimes the financial consumer relations department get complaints which are not within the scope of the central bank. So at that point, the selection officer has authority to send a reply saying that to the customer that this is not within the purview of the central bank. That facility is one facility. And also, when complaint is received, sometime financial consumer relationship department gets some complaints relevant to the matters that are not within the purview of the department. Simply some matters related to the labor matters about the financial institutions or employees provident funds. That is that kind of complaints when are also submitted through this online system. At that time, this particular system allows send these complaints to the relevant department directly to the online system. That facility is there. When we get a complaint relevant to this particular customer that is within the scope of the central bank, so the selection officer has authority to assign who is the handling officer, assign relevant handling officers, reviewing officers, and approval officers with necessary instructions. Selection officer is responsible for assign it to the relevant officers, the other officer. That means handling, reviewing, and approving officers. Selection officer will assign it to the relevant officers. Thereafter, handling officer will do the basic analysis. Reviewing officer do the detailed analysis, and final approving officer will decide the required action or required response. That is the process adopted under new complaint management system, online system.
Right. Thank
And
you very
also,
much, Mr. Kamal.
Mr. Varun also will give some further clarification in this regard.
Okay, sure. Mr. Varna?
Yeah. Can I add something now? Now, we handle only the complaints related to financial consumers. Now, as an example, now if it's related to maybe an employee issue, likewise maybe regarding a building issue of the financial service provider, we will direct them to prudential regulators. For banks, there's a separate department called Bank Supervision Department. For non-banks, there's another department called Non-Bank Supervision Financial Department. And these sometimes there are these CML those related matters. Those are handled by their separate department called Financial Intelligence Unit. Thank you.
Right. Thank you, Mr. Varna. So next questions is this is also necessary to digitalize how we received and handle the complaints. This is also relating to the complaint handling our CMS, complaint management system. Asking, may I kindly ask if you could share the key features of your system and the lessons learned during its development and implementation. I think Varuna is the best person to answer this question because you were in the earlier stage, in the planning stage of CMS. Mr. Varna?
Yeah. From features, now, first thing I can mention is now customers can directly online submit their complaints to central bank. And they can track the complaint, our responses at stage of the complaint, those stuff. Also, there's a MIS part. that all the were earlier, as Mr. Kamal mentioned, Excel-based databases. Now we have a special MIS dashboard, and we can analyze data. And we are now we are planning to maybe to bring a AI tool, something like that, to analyze complaint data. Another thing is this all the other these emails, messages. Those are digitalized. They are automatically sent to customers. Responses sent to customers, and the complaints. Our instruction directly goes to banks. Those stuff. As a challenge in our implementation process, the major challenge was now we are doing a manual thing now. Manual thing no, the challenge was now also we are experiencing now that we tried to automate our manual process. You should be really careful when you are trying to do that now. Now we don't need the same process now for automated complaint handling. So it's it's very challenging, and identifying the requirements and the necessary processes, it's a bit challenging. And also these now tracking those all data. Now we need to store them in our databases now in the different formats, and data cleansing part. It's also a bit of challenging now. Almost all the data is uploaded to our system. Hopefully now the erroneous data or erroneous maybe entries may be there. We need to clean them. Hopefully now I think data is clean, and we can generate MIS reports. Thank you.
Okay. Thank you, Mr. Varun and Kamal, because we have limited time, as I earlier mentioned. We have received a number of questions, and we will respond to all questions subsequently through our Nangsi's team. So one question I will respond. The asking is Central Banking of Sri Lanka also regulating cooperatives tools or any other specialized regulatory body for regulation of cooperatives? Answer is no. Cooperatives bodies do not come under the central bank purview. It's regulated and monitored by a separate department under the separate ministry. So that the department named as Cooperative Development Department. So other questions will be answered later. So thank you to everyone who participated in today's discussion, and to our speakers, especially Mr. Varun and Mr. Kamal, for their thoughtful and informative response. The questions raised today clearly reflect the importance of financial consumer protection and market conduct supervision in fostering trust and confidence in the financial system. So with that, I conclude the Q&A session. So I would like to thank our all participants. So now I am moving on to wrap up the today's presentation. So, ladies and gentlemen, so I believe you have gained some valuable insights into Sri Lanka's journey from handling financial consumer complaints to establish a market conduct supervisory framework. As highlighted by our speakers, effective financial consumer protection extends well beyond resolving individual complaints. Sri Lanka's experience demonstrates that consumer complaints should not simply be viewed as individual issues requiring resolutions. So instead, they simply provide valuable insights into customer experience, emerging risks, and opportunity to improve the financial system. So, complaint handling serves as a critical source of intelligence, enabling regulators to identify systematic issues and strengthen supervisory intervention and promote fair treatment of financial consumers. So today presentations also demonstrated how market conduct supervision contributes to enhancing transparency, accountability, and responsible business practices within the financial sector in Sri Lanka. Ultimately, these efforts help build and sustain consumer confidence, which is fundamental to maintaining a stable, inclusive, and resilient financial system. So finally, we also learn about the significant initiatives undertaken by the Central Bank of Sri Lanka to strengthen the financial consumer protection within the country, mainly including the establishment of the Financial Consumer Relations Department to ensure financial consumer protection in Sri Lanka, and issuing a financial consumer protection regulation to strengthen the financial consumer protection framework in Sri Lanka, and introduction of the complaint management system to improve the customer complaint handling process of the Central Bank of Sri Lanka. So finally, Central Bank of Sri Lanka has initiated proactive market conduct supervision through on-site examination and off-site surveillances to oversee the unfair and unethical business practices in the market. So these initiatives reflect Sri Lanka's continued commitment to along with the international best practices. So last, one important lesson we have learned is that protecting financial consumers is not the responsibility of the regulator alone. It requires the collective commitment of regulators, financial institutions, other policymakers, and some consumer organizations, and finally, consumers themselves. By working together, we can build a financial system that is not only stable and innovative, but also fair, transparent, and trusted by the people it serves. So I trust that today's presentation have provided you with a valuable insight into Sri Lanka's journey from handling financial consumer complaints to developing a comprehensive market conduct supervision framework. We hope that the experiences and lessons shared today will contribute to meaningful discussion and the continued advancement of financial consumer protection within your respective jurisdictions. So finally, on behalf of the Central Bank of Sri Lanka, I extend our sincere appreciation to the Alliance for Financial Inclusion, AFI. Thank you for giving this opportunity to the Central Bank of Sri Lanka, and especially to Ms. Nang Sidama, Regional Manager, Asian Region of the Alliance for Financial Inclusion, and her team for supporting us to organize and conduct today's presentation successfully. We are also grateful, dear all participants, for your active attention and engagement throughout this session. Thank you once again, our distinguished speakers, Mr. Varnan, Mr. Kamal, for your excellent presentation. So, Nancy, I now invite you to proceed with the next item on the program. Thank you. Thank you very much.
Thank you, Mr. Yanaka, for the wonderful and I think a very valuable session summary, sort of, and very rightly said that we should not stop here. This is just a window to Sri Lanka's good experience, and then we should continue. And then there's definitely for today's session, I think it is going to make some remarkable impact, like trigger into most of our regulators, our colleagues here, to look into their own regulations, their practices, and definitely there should be a continued cooperation between our members and then seek each other's best practices. Well, although we have completed the speakers session here, we are not quite at the end yet. Well, I believe that the more reflections we gather, the more valuable this session becomes for all of us. Therefore, let's hear a fresh perspective, a very brief, some closing insights from my colleague as well, because I have specifically assigned her to give us some closing insights. So, Rubini, you're most welcome.
Thanks, Nancy. I don't think I would do enough justice after Mr. Yanaka, so I feel a bit embarrassed to go right after his very robust closing. So please, everyone, bear with me. But a huge heartfelt thanks to Mr. Yanaka, Mr. Kamal, and Mr. Varuna for putting together this session and for walking us through Sri Lanka's journey so openly and very candid today. It's actually been eye-opening to learn about their journey in consumer protection, and quite frankly, a few things stood out. The 2023 Financial Consumer Protection Regulation, I think, was clearly the turning point in their journey and quite the cornerstone that took consumer protection from good intentions to a comprehensive and enforceable framework. And it had 5 pillars built around, quite frankly, one simple idea, I think, which is that consumers everywhere deserve to be treated fairly, and that for that fairness to happen, it needs a solid foundation and not merely a policy statement, but more of an implementation. And also the other, I think, notable achievement was the shift from the manual complaint registration to an online management system. And that was equally telling as well. And because it wasn't just a technological update, so to speak, it made the whole process timelier, more efficient, and it gave CBSL's regulatory efforts real momentum by streamlining what it used to be. And I think it is fitting that how Mr. Varuna summed up the presentation together with Mr. Kamal is that now it's time to look ahead and not back towards more comprehensive standalone legislations, like they're looking on laws on FCP and subsidiary legislations on this front. And it's only meaningful that this work keeps evolving with the market that it's meant to protect. And I think it goes to all members that this is a model that is worth taking home wherever you are in your own institution and on what journey you are. So once again, thank you so much to our CBSL members for your generosity in sharing this journey, and to everyone for your active engagement today. Thanks, Naxi.
Thanks, Rubini. That was a wonderful recap. I think you captured almost all the key insights from this session, which I also had in my mind. Yes, particularly on the digitization of the complaints handling management portal. I think many of us still resort to a manual practice of managing the complaints. I guess for those countries Sri Lanka would be a good mentor to look at, and then we can continue engagement with Central Bank of Sri Lanka. Another notable insight that I got was the record keeping of Central Bank of Sri Lanka, the data, the trends that's been there for over the years. Gives a lot of policy insights for regulators for supervising the complaints handling management, and in the effort to also progressively improving each and every aspects of managing it well. So these are some few key takeaways from my side as well. And then a very, very big thank you to all our esteemed speakers, to Mr. Yanaka, especially for the wonderful recap, also for Rubini and our esteemed speakers, and of course to all the participants for your very active engagement and excellent questions. I wish we had more time to discuss more of these questions. Nevertheless, we will try and answer your questions in the chat box. And then, so what I feel is that I have a request to Central Bank of Sri Lanka. Perhaps in the shared folder, I've created one more subfolder which says reading resources. Maybe we can request Sri Lanka colleagues to, if you can, to upload or share with us the FCP regulations or any related, related guidance or guidelines to managing and handling the digitized platform. This would be very beneficial to all of our members in this network and also in this room. As a part of, so we move to the next segment as a part of our usual AFI practice. And this is a regular drill that we have. May I invite you to take a few minutes to complete the evaluation survey shown on your screen here. I've also shared it in the chat box. And I think the survey link has also been up on the chat box if you can see. If you cannot, please do let us know. We'll keep the room open for the next 5 to 7 minutes. Let's keep it for 7 minutes. And then you please feel free to leave the room once you have completed the survey. For now, maybe Rubini, we will try and play some light, nice music again while we have this ambience of getting some valuable feedback. So thank you, everyone, and have a restful evening.